Inflation is the decline of purchasing power of a given currency over time. Fears of inflation in the year ahead have hit its highest level on record. When inflation rises, people may consider alternatives for stashing cash. In recent months, Americans have become more worried at the prospect of rising inflation. President Biden's $1.9 trillion pandemic relief package, on top of the $3.1 trillion in 2020, and now with more spending planned, have many worried. Economists are concerned that higher taxes cannot cover the new spending, and the Fed, choosing to keep interest rates low, could result in increased inflation. Now, macroeconomics is a difficult subject. This video is not focusing upon the inflation versus deflation debate. Rather, if in an inflationary scenario, what would be a better hedge, Bitcoin or gold? So hardcore Bitcoin supporters say that digital coin is the world's best hedge against rising inflation. However, gold has historically been considered the most effective hedge against inflation. Many investors view gold as the most important. Paper money loses value as more is printed, while the supply of gold is relatively consistent, as gold is limited and subject to mining. However, many studies have found that gold doesn't always correlate well to inflation. That is, when inflation rises, it doesn't mean that gold is necessarily a good bet. Studies show that gold prices have positive price elasticity, meaning the value increases along with demand. Additionally, gold has historically performed well during poor economic conditions. The purchasing power of gold is constant and largely unrelated to its current price. An investment that hedges against inflation would rise with the rapid growth in consumer prices. However, gold yielded a negative return for investors during some of the highest recent inflationary periods in the US. According to portfolio strategist at Morningstar Amy Arnott, there's no guarantee if there's a spike in inflation, gold will also generate above average returns. For example, gold investors lost 10% on average from 1980 to 1984, when the annual inflation rate was 6.5%. Likewise, gold had a negative 7.6% return from 1988 to 1991, a period when inflation was 4.6%. However, gold was a very successful hedge against inflation from 1973 to 1979, when the annual inflation rate averaged 8.8%. Gold returned an astonishing 35%. The correlation between gold and inflation is quite mixed when looked upon the short-term basis. At times, it has provided an effective hedge against inflation, while at other times it has not. However, when considering larger periods over the long term spanning several decades, the commodity is more consistent with its reputation as an inflation hedge. Now, looking at Bitcoin, supporters argue that it's the world's best hedge against rising consumer prices. This is because unlike US dollars, it's designed to have a limited supply, so it can't be devalued by a government or a central bank distributing too much of it. The question remains whether Bitcoin would really act as an effective hedge. It doesn't have a long enough history to establish that, says Cam Harvey, a senior advisor to research affiliates and a professor of finance at Duke University. In their research on gold, they found that it has held its value well for centuries, but they also found that it's prone to manias and crashes over shorter periods. Bitcoin is a highly volatile speculative asset. It has swung wildly in its short life, for reasons not really connected to anyone's view on inflation. Harvey stated that the price is not just driven by a money supply rule, it's driven by other speculative forces. If inflation induced a recession, investors might respond by stepping away from riskier assets, such as cryptocurrencies, and turning to more reliable assets. Many advocates for Bitcoin see its rising price as an early warning sign that our economic system is weak, and argue that Bitcoin could rise further as investors look for a haven. Bitcoin is unlike most other inflation hedges. Its value is based entirely on other people's willingness to hold it. Bitcoin isn't tied to any other assets, such as oil or real estate or earnings from a business, that might naturally rise in value along with consumer prices. Inflation could go up, and it's possible that Bitcoin could too, but they aren't directly linked. Michael Saylor, CEO of MicroStrategies and one of the biggest proponents of Bitcoin, stated that Bitcoin is outperforming gold as an inflation hedge. He stated that, "I think in the past 12 months, we have all been waiting for inflation, and I think we are seeing it now. I think investors are seeing that Bitcoin is up 330% and gold is up 7% in that period. so Bitcoin is outperforming gold as an inflation hedge by a factor of 50. Likewise, billionaire Paul Tudor Jones has placed his support with Bitcoin as an inflation hedge. He said that Bitcoin is a great way to protect wealth over the long run and is part of his portfolio just like gold. I like Bitcoin as a portfolio diversifier, Jones said. The only thing I know for certain, I want 5% in gold, 5% in Bitcoin, 5% in cash, and 5% in commodities. Goldman Sachs stated that Bitcoin is an alternative inflation hedge to copper, not gold. Jeff Curry, the global head of commodities research at Goldman Sachs, said that cryptocurrencies are an alternative to copper, not gold, when used as a hedge against inflation. You look at the correlation between Bitcoin and copper, or a measure of risk appetite and Bitcoin, and we've got 10 years of trading history in Bitcoin. It is definitely a risk-on asset. Gold prices have started to rise since the beginning of April due to a weakening dollar and an increase in demand because of rising inflation expectations. Meanwhile, cryptocurrencies have been really volatile. Bitcoin, for instance, is up more than 25% in 2021, but down more than 25% over the last couple months. Bitcoin and copper act as risk-on inflation hedges compared with gold, which is viewed as a safe haven or risk-off, according to Curry. There has always been a demand for gold, as it's driven by its perception as a superior anti-fiat asset. Likewise, Bitcoin has risen as an alternative anti-fiat asset. Bitcoin's increase in scale to become a better known and much easier to obtain now make it a much more viable competitor to gold. There is circumstantial evidence that some money has flowed directly from gold into Bitcoin. The following chart is from Charles Morris of Bytetree Asset Management and shows flows into investment funds holding both assets since last May. Bitcoin, like gold, is an anti-fiat asset. However, how much attention and appreciation should we give it? A key component of an anti-fiat asset is its ability to avoid major losses. Gold can have big drawdowns, but nothing like the epic losses that Bitcoin constantly inflicts on its holders before rallying again. As Bitcoin's decline tends to be 3 times bigger, risk can be equalized by holding 3 times as much as gold as Bitcoin. Is Bitcoin really that direct of a substitute for gold in an inflationary environment? It's too early to tell, as gold has proven historically a long-term reliable commodity. Although both can have short-term drawbacks, both offer a viable alternative to fiat currency, which is important to protect one's wealth in an environment whereby one's purchasing power decreases.